Hi, you guys. Welcome back to the program. My name is Brad, and this is the Firefighter's Financial Toolbox. Listen, last week after I received my fourth letter this year from Ally lowering their interest rate on their online savings, I decided to ask the question, is Ally worth keeping? We're going to talk about it next. Firefighter's Financial Toolbox. Welcome back, you guys. So today we're talking about whether Ally is worth keeping as my online bank. The rates keep dropping, and from the high point this year of 2.2% APY on my online savings, it's now down to 1.7. I got this letter last week, and I understand. It's the third rate drop the Fed's done this year, and the rates are coming down. But I decided to take a look and compare three of the online banks, Ally, Vaio Bank, and Marcus by Goldman Sachs, just to see if they're still competitive. Because I wanted to know if it's where my money should stay. Now, let me preface by saying that I have been with Ally for about 7 or 8 years now, and I've been very happy with their products. I use their CDs, I've used their money market, I have their online savings. I also use their online trading platform, which recently went to free stock trades, which is a plus. But anyway, I wanted to take a look to see if it's worth keeping to keep my cash. So, as you can see, the online savings is 1.7%. Now, the money market used to be broken down, the more you had in, the higher rate you would get. But now it looks like even if you have less than 5,000 or over 25,000, it's 0.75% APY. So obviously the online savings is a little better than that. Now, what about if you have a checking account with them? If you have $15,000 or less for your daily minimum balance, you get 0.10%. Now, I realize that's minimal, but checking accounts don't make much money. But what if you're somebody who likes to have more money in their checking account on a regular basis? What if let's say you kept over $15,000 in there all the time? You could get 0.50% APY. So you could get 0.5% even on your checking account for the money that you keep coming and going. So not too shabby. Now let's look at CDs. Now, we're going to compare like animals. We're going to compare $5,000 or less. Okay, so if I have a 12-month CD at Ally, it's 2%. If I have an 18-month CD, it actually goes down to 1.9%, which I don't understand. And if I want 2.25%, I have to go to 5 years. That's crazy. Now, they do have a raise your rate CD that starts at 2.05 for the 2-year or the 4-year, and with the 2-year, you get one chance to raise the rate if it goes up, and with the 4-year, you get 2 chances. They also have a no penalty CD, which is 11 month, but you can break it at any time. But that's only giving you 1.65%. Not really worth it to me. Now, but they also have, you can do IRA CDs. So if you're looking for that as a retirement account, those are available through them as well. Now let's look at Vaio Bank. Vaio Bank actually has the best online rate of the three that I tried. They're currently yielding 2.07% on all balance tiers. That doesn't mean it can't change. If we look at their CDs, a 12-month CD right now is only getting 1.64%. An 18-month actually is lower on this one as well, 1.59%, you guys. And if I wanted to go 5 years at Vaio, I could only get 1.78%. So even though I thought Ally's rates were low, they are a little better than Vaio Banks at this point. Now, Vaio does only offer the online savings and the CDs. So let's look at Marcus by Goldman Sachs. Their online savings account is yielding 1.70%. So exactly the same as Ally is. If we look at their high yield CDs, now we're going to look at the same thing. So if I want a 12-month CD, it is 2% even. If I want a 3-year CD with them, it's going to give me 2.05% APY. And there's a little comparison here to show that For example, Wells Fargo will give you 0.25% for that, and Bank of America will give you 0.55. But we know that doesn't matter. All right, so if I tied up my money with Marcus for 5 years, I could only get 2.15% APY. So out there, you guys, it really isn't that much better on the savings front. So what does this mean for us? Only keep as much money as you need in cash for your emergency fund. Or if you're in retirement, you're in decumulation, obviously you want to have 1 to 2 years of expenses in cash, because this is a risk-free thing. Remember, online savings is not investments. This is a safe way to keep your cash. And right now, as you can see, we're not making very much money on it. So keeping more cash right now is going to be counterproductive to your saving. Save what you need for an emergency, you guys, and then invest it. All right. If there's one out there that you know of that's doing better, you guys, let me know about it. Put it in the comments. If you got something out of this and you liked it, give me a thumbs up. If you're new to the channel and you haven't already subscribed, please do. We just passed 200 subscribers and I'm really stoked about that. And as long as you guys keep watching, I'm going to keep on making content.